Well, I want to talk about the economy now because, of course, anybody who lives outside the Canberra bubble knows it's the most important issue out there. Cost of living, and cost of living. And we saw this week that inflation is still elevated, and in 2 weeks, of course, the Reserve Bank has the option to hike interest rates again. You've got power prices and food prices, fuel prices are all still quite high, and mortgage stress is sky high. Businesses are collapsing at rates we haven't seen in decades. Well, to get across all the movements of the week and what we're likely to see in a couple of weeks' time, joining me now is Chief Economist at Macro Business, Leith Van Onselen. Leith, welcome. Unemployment this week dropped to 3.6%, which has brought forward concerns that it will help worsen inflation. You've got oil prices rising, but the market's predicting about a 25% chance of a rate hike on Melbourne Cup Day. I see today Terry McCrann writing in the Herald Sun that he thinks it's unlikely there would be another interest rate hike. But, you know, you've got another 6,700 jobs have been added in the month. It was lower than expected, but you've got the Treasurer walking around trumpeting, it's great, we've got unemployment this low, but we have been told that the unemployment rate will play a large part in decisions as to whether interest rates, increase or not.
Yeah, well, I mean, certainly the headline unemployment rate fell by 0.1%, right, to 3.6%. Now, that sounds great on the surface. The problem with it is, as you said, we only created 6,600 jobs. Now, because the population has grown so strongly, we actually need to create about 35,000 jobs per month just to keep the unemployment rate constant. Now, the reason why it fell was actually a bit of a statistical quirk. It's because we had a whole bunch of people actually drop out of the labour market. So that sort of gave it this sort of false dawn. And if you actually look at a lot of other sort of labour market measures, whether they be Roy Morgan's alternative unemployment measure or the SEEK job ads and SEEK applications per job ad data, that's all softened quite significantly over the past few months. So I think the labour market is actually weakening. I don't think it's yesterday's results going to play a part in the interest rate decision. The thing that will tilt the dial one way or another will be next week's September quarter CPI release. So economists are tipping that CPI will come in at around 1%. And if it comes in around 1% or below, I think the RBA will keep rates on hold. But if it comes in above that, they very well might hike. And it's interesting now, the Reserve Bank actually threw a bit of a curveball at economists and markets this week when it released its monetary policy minutes. And what it said that it's concerned about two things which could force its hand. And that's effectively that we've got this rapid growth in rents and also we've got this house price rebound, both of which have been caused by the Albanese government's mass immigration, the record immigration flows. So effectively we've got the Albanese government basically, pumping the foot on the gas, inducing demand by bringing in all these people. That's 626,000 population increase in last financial year. And what that's effectively doing is it's counteracting the Reserve Bank's rate hikes. It's working against the Reserve Bank to slow demand. And what it could mean is the Reserve Bank actually keeps rates higher for longer or is forced to hike again to counteract this stimulus coming from, this record immigration from the Albanese government.
And we've talked about this many times before, Leith, and of course the other major contributor at the moment is the cost of fuel. I mean, transport costs have gone up something like 17%, and the majority of that is accounted for in fuel. And Paul Murray, I know, talks about this all the time. I mean, the federal government tomorrow could have the fuel excise. I mean, they get about 49 cents in the dollar out of fuel. They could reduce the cost of fuel tomorrow. But what do you think is the likelihood of another interest rate rise either before the end of the year or early next year?
Look, if you'd asked me this a couple of weeks ago, I would have said minimal because we've got obviously the weakening economy and, we're in a per capita recession, all that sort of stuff. But obviously the rising petrol prices thrown a bit of a curveball, as has the Reserve Bank's minutes, which basically was more hawkish, which means it's more bullish on interest rates than inflation than what everyone thought. Look, I'd say, Terry McCrann's probably about right. It, probably is about 25% increase for another rate hike, maybe 50% chance. Again, it all tilts on what happens with with inflation next week, and then also wage growth, which will come out the next month. So basically, the Reserve Bank, I think, is doing the right thing. It is looking at the data, and it says if it comes in stronger than we expect, will hike, but if it doesn't, we'll keep rates on hold. So, I mean, I'm obviously sitting on the fence because I honestly don't know. It all depends on the data.
Well, the Reserve Bank seems to be in a bit of a pickle itself at the moment because they've posted a record $43 billion loss, which has pushed its balance sheet deeper into negative equity of almost $18 billion. And this obviously comes after the RBA's huge pandemic stimulus. And you've now got economists calling on the Treasurer, Jim Chalmers, to inject some $30 billion of emergency capital into the bank. Exactly how serious is this?
Look, I mean, obviously they've taken a punt, but it sort of reminds me a little bit of Monopoly. I mean, the bank always wins, right? So, Reserve Bank is the bank, and it's a bit sort of weird. It's it wants this emergency money pumped in when it can basically print money. It creates money. So, look, the whole thing's just it looks like it's a bet on the markets that's gone wrong. I'm sure the federal government will end up doing what it needs, to keep it, so-called solvent. Look, the thing I'm more concerned about, and this, I'm sorry to tilt this on you, but it's actually the fact that the Reserve Bank governor just received a 100,000 plus pay rise. I think that's a bit egregious when, given the Reserve Bank is the one telling everyone that we've got to keep a lid on inflation to keep a lid on wage growth to hold inflation back, when it's just awarded itself a 10% pay rise to the governor. That to me is the far bigger issue. And, I think that's pretty egregious. We're in this cost of living crisis and it's, sitting there awarding its top brass huge pay rises.
Yeah, I mean, how do you sell it to people? I mean, Philip Lowe made about $1 million in his last year, and he was going around telling us, the interest rates aren't going to go up, go and borrow money, and we all know what happened there. And he, of course, had access to that scheme in his early days at the Reserve Bank, where he basically got a half-price interest rate on his mortgage, so he benefited out of that. And then what is it now? The average person sitting on the Reserve Bank board is making around 80K a year. Is that right?
No. I mean, the amount of money that people get paid at the Reserve Bank's astronomical. As they got loads of people getting paid over 200 grand, and then heaps getting paid over 400 as well.
But board members, though, what's a board member making?
Actually, look, to be honest with you, I'm not sure. I can't tell you that because I don't know. But I'm sure they're on a good wicket because everyone at the Reserve Bank's on a good wicket, especially if you're at that top upper echelon. And to be fair, this isn't just a problem across the Reserve Bank. We've got the head of the National Broadband Network getting paid $3 million a year. We've got all the university vice chancellors getting paid over $1 million. So we've got this kind of problem where we've got this greedflation going on if you're one of the top people in these quasi-government organisations. Whilst ordinary punters are basically doing it tough. And, this has been a problem with CEO pay in general, but it's really infected our public service and quasi-government bodies. I mean, I put universities in that bucket because they're basically funded by taxpayers. And, it's right across the spectrum where the head of the Australia Post, National Broadband Network, Reserve Bank, universities, you name it, they're all getting paid way too much. And their pay rises just don't reflect, their productivity and their value, in my opinion.
Well, if anyone else can let me know if they've had a 10% pay rise, I'd love to hear it. Leith Van Onselen, thank you for your time.